Mark Zuckerberg is now the 24th richest person in the world, with an estimated net worth of $49.6 billion, and that's all thanks to Facebook, or Meta. Hello viewers, welcome back to yet another video on our channel. Today we will share with you why Facebook is Mark Zuckerberg's best investment, so stay tuned till the end and let's dive right into it. Mark Zuckerberg is the brain behind Facebook and one of the world's richest people. Zuckerberg is the co-founder and the CEO of Meta Platforms, the parent company of Facebook. In 2007, Zuckerberg became the world's youngest billionaire at age 23. Here's a look at how he made his wealth and how Facebook is foremost his best investment. The beginning of Facebook. Mark Zuckerberg was a Harvard computer science student when he, along with classmates Eduardo Saverin, Dustin Moskovitz, and Chris Hughes, invented Facebook. Amazingly, the idea for the website, now the world's most popular social networking page, was inspired by a botched effort to get internet users to rate one another's photos. Over the course of his sophomore year, Zuckerberg built what would become Facebook. When it launched on February 4, he and his roommates were glued to their screens, watching as an estimated 1,200 to 1,500 of their fellow students signed up for the site within its first 24 hours of existence. From there, Facebook expanded rapidly, moving to other Boston area schools and the rest of the Ivy League that spring. By the end of the year, the site had 1 million users. Angel investor Peter Thiel had invested $500,000, and Zuckerberg had left Harvard to run Facebook from its new headquarters in California. From there, Facebook spread across the world, becoming not only an incredibly valuable company, but also one of the most important institutions of the early 21st century. Wait! Before we move on, if you're enjoying this video, make sure to give it a big thumbs up and subscribe to our channel if you haven't already. Also, don't forget to hit the notification bell to stay updated of our future uploads. Now let's get back to our video. Facebook IPO and acquisitions. In mid-2005, Facebook raised $12.7 million in venture capital and expanded access to hundreds of universities and high schools. 1 year later, the social network opened to the general public, and Yahoo offered $1 billion to buy the company, a bid that was swiftly rejected by Zuckerberg. In 2012, Facebook went public and became the most successful internet initial public offering, IPO, in history, when it raised $16 billion. That same year, Facebook bought the photo-sharing application Instagram, and Zuckerberg married Priscilla Chan in a surprise wedding the day after the IPO. Mark Zuckerberg's investment strategy. Zuckerberg is a famous investor, although he's not a fund manager type like Warren Buffett, Ray Dalio, or Carl Icahn. Those guys increased their wealth by learning to pick good companies that already existed. Zuckerberg's path was different. He found fortune through entrepreneurship, building a single company from the ground up. Zuckerberg's public interviews typically center on Facebook and Meta platforms, rather than his investing style or which stocks to buy. Still, it's possible to glean a sense of his style by looking at the projects he personally funds and the companies he's rolled into his Meta Platforms empire. Zuckerberg investments. Many of Zuckerberg's personal projects are cause-driven. Recent investments and grants funded by CZI have focused on technical solutions for healthcare, climate change, and education. Some of the companies that Zuckerberg has supported include Bluefield Technologies, a company that makes sensors and microsatellites that detect methane leaks; Lean Lab Education, a non-profit that develops technologies for public education; BYJUs, which is an education technology company based in India; Nerdy, the owner of Varsity Tutors, an online tutoring marketplace. Nerdy is the first CZI investment to go public; Carbon Built, a producer of low-cost, low-carbon concrete. Meta Platforms investments. Meta's early acquisition strategy involved buying up potential rivals such as Instagram in 2012 and WhatsApp in 2014, but in recent years the company has used acquisitions to position itself as a leader in the metaverse. The metaverse is a mashup of virtual reality, VR, and augmented reality, AR. Zuckerberg sees it as the next evolution of the internet, where users can connect, interact, and have immersive virtual experiences. His attachment to the concept drove the company's 2021 name change from Facebook to Meta Platforms. Takeaways for individual investors. As an individual investor, your financial goals probably don't match Zuckerberg's. You may not have corporate rivals, for example, or the resources to battle large-scale global climate change. Still, there are some investing strategies that you can copy from Zuckerberg, CZI, and Meta. Number 1. Focus on sectors you know. Zuckerberg knows technology. You might feel more comfortable investing in the financial sector, real estate, food and beverage, or mass market retail. Number 2. Invest in emerging trends that interest you. Zuckerberg wants to be at the forefront of virtual experiences. Maybe you don't get the metaverse, but what about self-driving cars or biotech that saves lives? Find a cause you can get behind and invest there. Number 3. Review your portfolio for exposure gaps and fill them in as necessary. Meta has a long history of buying companies to round out the experience on its biggest platform, Facebook. You can apply a similar concept to your investment portfolio. Look for gaps in your exposure and consider whether you should fill them. Think in terms of sectors, geographies, and business size. Zuckerberg started Facebook from his dorm room, turning it into one of the largest companies in the world. Through Facebook and its many acquisitions such as Instagram and WhatsApp, Zuckerberg controls the majority of the way consumers consume content and interact with one another. Is there any investment that Zuckerberg could have made that would have been better than Facebook? No, there isn't. Over the next 11 years, I doubt very little will change.